Aurora Cannabis, another cannabis producer reporting losses. Of course, the industry is still in its nascent phases, but they do say they're on track for their Cannabis 2.0 rollout of a line of chocolates, mints and vapes. Let's get more perspective on the growth strategy. We're joined by Michael Singer, Executive Chairman of Aurora Cannabis. Michael, I guess life is always this way. There's good news, there's bad news. You had a 33% drop in rec cannabis sales to the provinces, although I do see that Jeffries is noting here you don't seem to have been booking the product returns and price cuts that have plagued some other companies.
That is very true. Hi, Andrew. Nice to be back. I'd like to just take a step back and help you and maybe your viewers understand exactly what we announced last night. As the global cannabis leader, we've made some definitive action, some important steps in positioning Aurora for long-term success. I've never been more confident in that statement than today. We're really focused on a number of things that really positions us in a favorable way.
Michael, I will have to ask you to keep it brief, though, because we do have some questions to ask you. Go ahead, please.
I will, Andrew, but we're focused on a couple of key initiatives, and that is strengthening our balance sheet, and you saw we went a long way in doing that last night. Our near-term desire to reach profitability and our industry-leading sort of gross margins, which are at 58%, which are built off of our lowest cost to produce at 85 cents, will help us really achieve that in the very near term. And we are, in an aggressive way, focused on a U.S. entry strategy.
But Michael, the shares down 6% today, another 1-year low. It looks like investors, some of them are running out of patience.
No, I think I actually disagree. I think this is a level setting, and I think we're better positioned than our peers, I think, to really succeed going forward. And again, it's driven by we're in an evolving market, and an evolving market when you have high margins and low cost to produce, this really positions us in a unique way to really drive to near-term profitability. And you noted earlier about Cannabis 2.0. We are ready. That is a huge market opportunity for us that we're ready for, and our margins and our low cost to produce are really going to give us an opportunity to maximize that opportunity for our company and our shareholders.
But as you know, recreational pot was supposed to be a growth industry. Your rec sales down 33% quarter over quarter.
That is true, but we guided that. We in our conference call in September for Q4, we knew there was going to be a backlog of inventory in the provinces, and you highlighted earlier the significant returns that some of our peers have seen. To date, that has not happened to Aurora, and we're very confident of that position that we're in. The other thing is the retail outlets. There aren't enough retail stores in key markets like Ontario. That's changing, and as that changes, and based on our current ranking, we're confident that with the rollout of 2.0, you're going to see Aurora sort of excel from this point forward, and that really positions us more favorably than our peers, in my opinion.
Before we get into 2.0, and obviously that's a fascinating area, are we in a perfect storm right now? It's been such a rough week for cannabis investors. I mean, a perfect storm, too much supply meeting not enough stores. Well, it's a level set. I think what you've seen is the market is uncertain as to where it's going from here. And what I could tell you is, again, because of this evolving market and our ability to generate 58% gross margins with this low cost to produce, this positions us very, very favorably to go forward. So our facilities are producing at phenomenal efficiency. We're seeing 20-30% greater yields than we anticipated. And that's why we decided to put the brakes on 2 key projects, which is going to save us another approximately $200 million. And that just lends to the idea that we do not, in a material way, need to go to the market to raise capital and to further dilute our shareholders. We are sensitive to that, and by virtue of our strengthening of the balance sheet, I think that positions us very nicely to sort of drive forward without that risk to our shareholders. Now, I talked about Jeffries earlier. They have a buy, but they say investor confidence around no more dilution, quote, likely to be minimal. You have more than 1 billion shares outstanding. You've obtained conversion of that debenture that was hanging over you early by issuing stock at a discount. You also issued a bunch of money under this so-called at-the-market facility. So you keep printing up more stock.
Correct. Although what I could tell you, and part of what we announced yesterday, is this idea of early converting our debenture, which is due in March, putting a little extra cash on our balance sheet by virtue of the ATM, as you described,
and the significant sort of deferral of expenses or costs that we put with regards to CapEx spending, we are in a much stronger financial position today, and that then lends to the idea that we, are not at risk, if you want, of having to go back into the market and raise a material amount of capital to continue to fuel our business. This, again, just sort of plays very well into Cannabis 2.0, and given our margins and our low cost to produce, we're confident that we're going to be able to show a continued leadership in the consumer market with a variety of very exciting products that we're ready to launch next month.
So you touched on this, Michael, that big Aurora Sun facility in Alberta. You're basically halting that one for now.
We are, and that's because we're really seeing tremendous yields coming out of our existing facilities. We haven't taken our eye off the big picture. Our view of the future of cannabis at a global scale hasn't changed. I think what you're seeing is just a short-term sort of level setting. And so we put those projects on hold because we're confident we're going to need those facilities to scale up once we see the demand on a global scale sort of come into play. And we're expecting that, and we're going to be prepared, probably better prepared than any of our peers by virtue of these two massive Sky class facilities that that we've positioned ready to go when we see that demand increase.
Of course, your other giant one there near the Edmonton airport. What about America, though? Some investors are apparently getting impatient. You still haven't announced a big partnership with a consumer goods company in America. What's the delay? And it looks like you're falling behind here.
So not at all. In fact, Andrew, I'm actually very encouraged. I'm excited about the discussions we're having. Remember, this is with a lot of help from Nelson Peltz, who has connected us and is actually working very closely with myself and our team as we engage in numerous discussions with these global CPG companies. And that's part of our U.S. strategy. And so when we do announce our entry point into the U.S., it's going to be very clear how Nelson and the relationships that Nelson has helped connect us with, and the fact that Nelson is actively involved in these discussions, are going to be able to use the U.S. as a platform for us to really become a global CPG player in many of these exciting industry verticals. So we're advancing that opportunity very quickly, and we will be able to announce something, but we're not ready to announce those exciting developments today.
Finally, just on Medicine Hat. Now, Andrew McCreath was telling us earlier that you hadn't actually poured the concrete in Medicine Hat, and he's hearing that none of the 400 job people had actually been hired. So have you hired anyone in Medicine Hat? And presumably you'll have to be laying them off if you have.
No, so it's a good question, and we're careful about how we are tightening the belt and being very cautious about spending so that we can drive this company to near-term profitability. The cement is poured, though. All the walls are up. That facility is ready to grow. In fact, there's going to be a number of flowering rooms that are up and running. This is just about putting on hold the further expansion until we see that global demand pick up. Again, I think positioning us maybe more favorably than our peers to be able to ramp that global opportunity up when we see the demand there.
Oh, I see. But will you have to you'll have to lay some people off, I'm guessing, in Medicine Hat, unfortunately.
No, I don't expect we're going to have to do so in any material way.
Right. Sorry, how come if you're not going to be producing, how would you keep them on the payroll, though?
Well, we haven't done a significant part of our hiring with regards to that facility today. The facility is, obviously not complete. We've scaled it up appropriately, and we've brought just enough people that we think are necessary to allow that facility to operate at its early day, at this level, if you want, until we see that demand. Of course, then we're going to pick that up. We also very carefully, we do move some of our key people around from different facilities. So, Sky is only a couple of hours away from the Medicine Hat facility. So we have a number of our Sky experienced employees that are out there sort of supporting that part of our business as well.
Thanks very much. And I understand you just won 7 medals for the high quality of your flower. So congratulations to your bud tenders for that one. Michael, we'll have to leave it there. Thank you very much indeed.
Thank you, Andrew.
Michael Singer, Executive Chairman at Aurora Cannabis.